Every year, new business trends capture attention. One year it's remote work, the next it's artificial intelligence, automation, or a new wave of startups. Some trends generate excitement for a few months before fading away. Others permanently reshape how businesses operate. The challenge for leaders is knowing the difference. Right now, one trend appears to be moving beyond a temporary shift and becoming a long-term transformation. Across industries, companies are focusing less on growing as quickly as possible and more on building stronger, more adaptable organizations. It's a trend influencing hiring, technology, investment, customer service, and corporate strategy, and it could shape business for years to come. One of the biggest reasons this trend is gaining momentum is economic uncertainty. Businesses have learned that conditions can change quickly. Interest rates rise, consumer spending shifts, supply chains experience disruptions, new technologies emerge almost overnight. Instead of assuming the future will be predictable, companies are preparing for continuous change. That preparation is changing how they make decisions. Rather than investing aggressively in every opportunity, businesses are becoming more selective. They're choosing projects that strengthen long-term competitiveness instead of chasing short-term growth. Artificial intelligence has accelerated this trend. Companies are no longer asking whether AI matters. They're asking how to use it responsibly and effectively. Customer service teams are using AI to answer routine questions faster. Finance departments automate reporting and forecasting. Marketing teams analyze customer behavior more accurately. Operations managers improve scheduling and inventory planning. Businesses are discovering that AI works best when it supports employees instead of replacing them. The result is higher productivity and faster decision-making without sacrificing human expertise. Another important part of this long-term trend is operational efficiency. As organizations grow, they naturally become more complicated. New products are introduced, departments expand, additional software is purchased, approval processes become longer. Eventually, complexity begins slowing progress. Many companies are now reversing that pattern. They're simplifying workflows, removing unnecessary meetings, reducing duplicate work, consolidating technology platforms. Instead of adding more layers, they're making their organizations easier to manage. Customer expectations are also driving this transformation. People expect businesses to respond quickly, communicate clearly, and provide seamless digital experiences. Customers compare every company to the best experience they've ever had, regardless of the industry. A retailer, a bank, and a healthcare provider are all judged by similar standards of convenience and responsiveness. Businesses understand that customer experience has become one of the strongest competitive advantages available. That's leading to continued investment in digital platforms, service quality, and faster support. Financial discipline has become another defining characteristic. Years ago, many companies focused heavily on expanding as fast as possible. Today, executives are paying closer attention to profitability, cash flow, and efficient use of resources. Growth still matters, but sustainable growth matters even more. Businesses are becoming careful about where they invest and how they allocate capital. Projects that strengthen long-term competitiveness receive priority. Those with uncertain value are often delayed or canceled. Workforce development is changing as well. Technology evolves quickly, which means employee skills must evolve too. Organizations are investing more heavily in continuous learning. Employees are developing digital skills, leadership capabilities, data analysis knowledge, and problem-solving abilities. Businesses recognize that a workforce capable of adapting to change is one of their greatest long-term assets. Instead of treating training as an occasional event, they're making learning part of everyday business. Supply chains continue evolving alongside these changes. Recent disruptions showed the risks of depending too heavily on one supplier or one manufacturing location. Companies are building greater flexibility into their operations. They're diversifying suppliers, improving inventory management, strengthening relationships with key partners. These investments may increase costs in the short term, but they reduce long-term risk and improve reliability. Leadership is adapting too. Today's executives must balance technology, customer expectations, workforce development, financial performance, cybersecurity, and economic uncertainty simultaneously. The strongest leaders are becoming more flexible. They're encouraging experimentation, listening carefully to customer feedback, and adjusting strategies whenever conditions change. Instead of relying on rigid long-term plans, they're building organizations capable of continuous improvement. Data has become another essential advantage. Businesses generate enormous amounts of information every day. Sales trends, customer preferences, website traffic, operational performance, financial results. Companies that organize and analyze this data effectively gain valuable insights into changing market conditions. Better information allows faster, more confident decision-making. That ability becomes increasingly valuable as competition intensifies. Innovation remains important, but businesses are approaching it differently. Rather than introducing countless new products, companies are concentrating on meaningful improvements. They test ideas earlier, gather customer feedback more frequently, refine products continuously. This disciplined approach often produces stronger long-term results than chasing every new opportunity. Perhaps the biggest reason this trend could last for years is that it isn't driven by one event. It's being supported by several powerful forces at once. Artificial intelligence continues advancing. Customer expectations continue rising. Technology keeps improving. Competition remains global. Economic conditions remain unpredictable. All of these factors encourage businesses to become more resilient, more efficient, and more adaptable. Even if one factor changes, the others are likely to keep pushing companies in the same direction. Looking ahead, businesses that embrace this trend will likely be better positioned for long-term success. They'll continue investing in productivity instead of unnecessary complexity. They'll strengthen customer relationships instead of focusing only on acquiring new ones. They'll develop employees instead of relying solely on hiring, and they'll remain flexible enough to respond to whatever changes come next. The business trend that could last for years isn't a temporary reaction to current events. It's a fundamental shift in how successful companies think. They're building organizations designed to perform well in changing conditions rather than assuming stability will return. That mindset is influencing decisions across every major industry. And as more companies adopt the same approach, this quiet transformation may become one of the defining business trends of the decade. In the years ahead, the companies that succeed won't necessarily be the biggest or the fastest growing. They'll be the ones that continue learning, adapting, simplifying, and investing wisely while the business world keeps evolving around them. That's why this trend isn't just shaping today's market. It's helping define the future of business itself.